Hello, everyone. Today we're talking with Candice Blair, owner of the Candice Blair Group, a residential realtor and property manager here in South Orange County. Candice works with homeowners at every stage, from renting to selling to long-term investment and property management, and brings unique full-picture perspective to real estate. So Candice, thanks for being here with us today.
Thank you.
What's the biggest mistake that homeowners make when they're managing or selling real estate?
I think the biggest mistake homeowners are making is not seeing the big picture and having a strategy. A lot of times they just want to sell their home, but really what they need to do is take a full picture approach and understand their finances, their long-term goals, and the tax implications of selling a home. So it's important that sellers really look at all of those aspects versus just selling the home. Because if they do that, it could be a big mistake.
Right. And I often hear about people shocked about how much taxes they have to pay when they sell a property.
Yeah.
So
The worst mistake you can make is not understanding that, and there's no going back. After you sell the home and you're working with your accountant on your taxes, if you see that, oops, I should have waited, maybe there was some annual threshold, like being in the home 2 of the last 5 years, or some strategies with investment properties. Planning is really important when you're making such a big financial decision.
right. After you sell it, it's too late, right?
Exactly. Yep.
How does working with both buyers and rental owners give you a different perspective than agents who only focus on sales?
So that's a good question. So when we're working with buyers and with sellers, we're looking at all of their options, not just the real estate sales transaction. And in people's lives, there's different goals, there's different situations, and sometimes the right choice can be holding the property as a rental, as an income property, or in some cases it might be selling, and there's always a good time to buy depending on finances. So we like to understand the big picture. We ask a lot of questions. For example, we work with a lot of accidental landlords. A family may inherit a property, or they may be moving one of their aging parents into an assisted living home, and they come to us and say, can you sell this home? And many times my response is, no, let's not sell it. Let's take advantage of some huge tax savings when it comes to capital gains.
Right.
By having you hold the property as an investment property. You can wait until the time is right to sell it. And there's some advantages of that, not just for taxes, but for getting some rent income to offset the cost of the assisted living for the family member. And as you know, in California, when somebody passes, the capital gains of that property, that the tax basis gets started to the day of passing. So instead of paying hundreds of thousands of dollars in capital gains, if they were to sell it before the parent passes, they can save a lot of money if they wait.
Wow. It's interesting. I often hear people say, man, I shouldn't have sold that property. I should have kept it as a rental property. And they often regret it in the past. So it's very nice to be able to work with a real estate agent like yourself, where you can give the client options.
That's true. The biggest regret I hear is people selling, not buying in California. And also a big regret if they sell it too soon. For instance, if you've lived in it 2 years, then you have California exemptions when you go to sell the property. And so let's say you sell it a year and a half in and you have a lot of equity. That's going to be very expensive. It could have waited half a year and been exempt from, if they're married, $500,000 of capital gains.
Right. That's good information. So for homeowners considering turning their home into a rental, what do they often underestimate?
There's a couple things that commonly get underestimated here. Number one would just be the legal implications of being a landlord and all the ins and outs of that. So it's important to understand the California tenant landlord laws. You don't want to make any mistakes with those, because that can get costly with the litigious state that we rent our homes in. And so understanding also the process of having a rental property, how to handle maintenance requests from tenants, emergency maintenance requests that come in sometimes when you're on your vacation or after hours, how to deal with the turnover, the leasing process, the screening process. So there's lots of steps in being a landlord, and there's a lot of new laws that we're seeing come into place as well. Secondly, would be the maintenance of the home. I think people underestimate the habitability expectations and laws for landlords. So making sure that your home is kept up to speed. As an insurance agent, Adrian, you understand this too, because once there's a claim, let's say your pipes are old and there's a slab leak. Well, when you're living in the home as a homeowner, you're going to react different than a tenant.
Right.
A tenant's not going to be so patient with that, and you'll have loss in rent, you'll have extra costs. So really getting ahead of the curve and handling those type of maintenance and repairs proactively to prevent them from happening once the property's a rental property.
Right, that makes a whole lot of sense. And then you can somewhat understand what your risks are going into renting a property. So
Yeah,
that
and
makes
having a
lot of sense.
reserve, having some
Right.
funds put away so that you can handle those unexpected expenses.
That's all great information. So we've heard about recent changes in California within the rental industry. How are those changes affecting rental owners and everyday homeowners?
They really are starting to make a lot of changes in California rental law, and they're affecting owners in a big impact in the way that they lease their property. Some examples would be, how much security deposit are you legally allowed to charge a tenant? That is going to be dependent on your exemption from being a small landlord versus a large landlord. So you really need to know that going into it. You're advertising that security deposit. So for example, if you own more than 2 rental properties in the US, you're considered a large landlord, and you can only charge 1 month's rent as security deposit and no pet deposit.
Oh, wow, that's interesting.
So if you have less than that, then you can charge up to 2 months rent as a security deposit. But understanding that is very important, because it can get expensive if you have those mistakes and a tenant turns you in for that.
Right, right. It sounds like being a landlord is more of a full-time job these days than a part-time job.
It can be, and there's some landlords that get lucky and they put in a tenant that's one of those very quiet, doesn't complain, just pays the rent. That could always happen, but we see a lot of the opposite of that too. So you always want to be prepared for both. Another big change that we saw this year was with the way that you return a tenant's security deposit. California now requires 3 sets of photos and an itemized statement. So it's very important that landlords are taking photos and documenting the condition of the property before the tenant moves in, then immediately after they move out of any damaged items, and then after they're fixed. So you need 3 sets of photos if you want to deduct for any damage that the tenant created in your property.
Wow, wow. So it sounds like that California is making landlords more responsible for proving, certain things with the tenant, essentially.
Yeah, unfortunately, there's some bad landlords out
Yeah.
there, and so California is creating laws to protect the consumer and the renters. But it also makes it extremely more difficult and tedious for the landlord.
So the landlord has to be a lot more organized than they were before.
Absolutely. Having processes and procedures for things, and also documenting everything, because it is a business that you're trying to protect yourself in case of something that happens in the future. So
Right.
documenting every request for maintenance and how you handled it and how quickly you handled it in a date and time stamped fashion. So get out your old spreadsheet, even better have some software.
Right, right. Or a property manager.
Or a property manager, absolutely.
Well, that's all great information. So, investors and landlords, they're going to go out, they're going to purchase, different properties. It's probably the biggest investment they're going to buy, right? In most cases, or at least in a lot of cases. So what are some things that investors can do to protect their investments?
Well, number one, insurance.
I like that one.
Yes, yeah, they should have at least $1 million liability policy on their properties. But also from a maintenance perspective, be proactive. Think about what could go wrong. Have systems that are important in your home, such as your electrical, your HVAC, your plumbing. Make sure those are updated and working efficiently. Keep the property in good showing condition. So I'm talking about updates. we don't want shaggy old carpet in a rental property because, for one, it's not going to rent quickly. It won't rent for the highest price, and that will cost you money. You're not going to be getting the most out of your investment property. So invest in hard flooring, invest in new neutral paint colors. It will come back to you in returns. Your home will rent faster, and it can be a write-off, which can help in the future when you go to sell the property.
Right. All these things are so, it's important to work with somebody that understands this dynamic, because many people don't think of everything when they're purchasing a property. And so hiring a professional really puts everything on the table, and they know what they're getting themselves into. They can plan. And so I definitely see the value in that for sure.
And having somebody understand the rental values. A lot of times people will work with a realtor who will maybe overestimate the rental potential of a property when they're trying to sell it to the buyer. So really understand what the property can rent for, so you can do the numbers and make sure that it makes financial sense.
Okay, that's all good information. So moving on, what happens if a landlord or a homeowner wants to sell the property? What are some of the things they should consider when thinking to rent it out or to keep it?
Yeah, so a lot of homeowners in our area are faced with this decision. I have this home, I don't need to live there anymore. Maybe I'm being relocated, and should I sell it or should I keep it as a rental? So it comes down to looking at the numbers. First, we want to make sure they have equity in the home, and then is it going to cash flow? After you have a reserve fund, you're paying your property manager, your mortgage, your taxes, your insurance, is there going to be some income there? And can you handle it if you have a time where a renter isn't paying or there's turnover in the property?
Right.
So we look at that big picture, but all in all, if their goal is to ever come back and use that home, it would be favorable to keep it as a rental. Or if their capital gains exposure is so great, because people are equity rich right now. It's a good problem, especially in California. But that's a way to protect that asset and hold on to it, and maybe turn it into a rental and then do a 1031 strategically into something else they want to move into. So we just look at the big picture and then make a good a recommendation from there.
Right. And you mentioned before that you had some clients that would move out of state, but they would rent their home on a short-term basis over here in California, and they had the flexibility to continue to come back and use it when they wanted to. Can you go into that a little bit with us?
Yeah, we're seeing a lot of people in our area. They want to keep the property, but they want to maximize the rental the rental income on it. So we'll turn it into what's called a midterm rental. The home may already be furnished. That's ideal. And we rent it to people that are looking for maybe a 3-month or a 6-month rental. We found a lot of the tenants that are looking for these type of properties are tenants who've had, or they're homeowners who have had a flood or damage to their primary property, and the insurance company is paying for their relocation costs. They make excellent midterm renters. People that are remodeling their home, or maybe they're going through a life change, a job transfer, a divorce, and they're looking for something temporary.
Right.
So they typically will pay a third more of rent than the standard long-term rent, and we can rent those pretty much all year round. And some owners like to be able to come back and use that property during the year, so it makes for a very flexible rental property.
Wow, that's really interesting. No, I can actually see myself doing that one day. Having the flexibility to come back to California and then go somewhere else as well, as like a vacation home.
And offset all your holding costs. It would cover your taxes and hopefully your mortgage in that case. But look at the big picture of all those numbers to decide if that's a good option.
Right. Thank you for spending time with us today. At Coastal Connects, we believe that real estate decisions shouldn't happen in isolation. They should be part of a bigger financial picture. If you're planning for your real estate goals or thinking about your long-term financial future, we'd love to connect. Our team doesn't just offer real estate advice. We bring together seasoned professionals in tax, insurance, lending, and financial planning so you can take a more holistic approach to protecting and growing your assets. If you'd like thoughtful guidance and coordinated strategy, please reach out to us. We're here to help to make confident, informed decisions every step of the way.